Hello, my name is Jasper van den Hout and I'm a director with the IAASB. Today, I'm joined by my colleague Isabel Reich, who is a senior manager with the IAASB. We were both part of the IAASB team that developed the ISA for LCE. This is the third video in our three-part video series detailing the IAASB's new standard for audits of less complex entities, also known as the ISA for LCE. In this video, we're going to walk you through the structure and flow of the standard. The ISA for LCE is the new IAASB standard for financial audits of less complex entities and is an alternative to using the ISAs. The standard is proportionate and tailored for the needs of an audit of less complex entity. The ISA for LCE is based on the ISAs and enables the auditor to obtain the same level of assurance, reasonable assurance. Importantly, the ISA for LCE is not lesser than an audit performed under the ISAs, and it does not reduce the quality of the audit or necessarily the amount of work needed. Instead, the auditor's work is more focused in targeted, relevant areas while still obtaining reasonable assurance. Let's first talk about the design principles. The ISA for LCE was specifically written for practitioners who audit less complex entities. The standard has a risk-based approach and is principle-based. This enables it to be applied in a wide range of circumstances and across different sectors and industries. The standard is focused on the outcome of the requirement that the auditors need to achieve. The structure of the standard is intuitive and follows the natural flow of the audit, from client acceptance and engagement continuance to reporting. The requirements are clear, understandable, and concise, with a focus on avoiding unnecessary words, repetitions, or ambiguous language. The ISA for LCE is based on the full suite of ISAs. When developing the ISA for LCE, all requirements in the ISAs were reviewed to determine for each requirement if it should be added, modified, or excluded. For example, all ISA requirements specific to listed and public interest entities were excluded, since listed and public interest entities are specifically prohibited from using the ISA for LCE. Now, Isabel will go over the flow of the standard.
Thank you. In this section, I'm going to give you an overview of the different parts of the standard and then explain in more details. The ISA for LCE includes a preface, the authority, and 10 parts that set out the requirements. The preface explains the responsibility of auditors as well as management. It also details the standard format. The authority, Part A, sets out which entity the standard can be used for. This part must be followed carefully, as it is important that the ISA for LCE is only used when auditing less complex entities. The structure of the ISA for LCE was designed to help auditor understand the flow of an audit. Parts 1 to 3 covers the matters that are overarching to the audit. Parts 4 through 8 address procedural aspects of the audit, from the acceptance or continuance of the engagement through to concluding. Part 9 addresses the reporting phase of the audit. And Part 10 addresses additional requirements that are specific to audits of group financial statements. Some audit concepts have been grouped together to consider the typical process of an audit of an LCE. For example, Part 5 on planning includes requirements about determining materiality and overall planning, as these steps are performed together in practice. Let's review each part in detail. Parts 1 to 3 sets out the broad concept and overarching requirements. Part 1 talks about the fundamental concepts and general principles to be applied throughout the audit, such as professional judgment, professional skepticism, fraud, law and regulation, and related parties. Part 2 focuses on the general documentation and communication to management and those charged with governance. Part 3 sets out the auditor's and engagement partner's obligation and responsibility for quality management, keeping in mind the typical nature and circumstances of an audit of an LCE. Next are parts 4 to 8, which includes the procedural requirements of an audit following the flow of an audit. Part 4 sets out the auditor's obligation for agreeing to the terms of engagement, including determining that the use of the ISA for LCE is appropriate. Part 5 sets out responsibility for planning the audit, including the engagement team discussion and setting materiality. Part 6 sets out requirements for understanding the entity and its environment, the applicable financial reporting framework, and the entity's internal control system, identifying risk of material misstatements, and assessing inherent risk and control risk. Part 6 combines certain requirements to be more proportionate to the nature and circumstances of an audit of an LCE, and to take into account the typical process of an audit of such entity. For example, identifying and assessing risk of material misstatement have been combined into one single requirement. This requirement was also combined with a requirement to determine the relevant assertion and the related significant classes of transaction, accounts balances, and disclosures. Part 7 sets out requirements for the design and implementation of responses to those assessed risks, including substantive procedures and test of controls. It also sets out requirements for specific procedures on various topics within an audit, for example, control testing and accounting estimates. Part 8 sets out requirements for the evaluation of misstatements, concluding activities and evaluations, including going concern, subsequent events, and analytical procedures, and obtaining written representation. This part also covers the engagement partner's conclusion related to quality management. Next is Part 9, which sets out the requirements for forming an opinion, including the types of audit opinions, the content of the auditor's report, other information, and comparative information. Part 9 presents the reporting requirements by following a three-part approach. First, providing a specified format for an unmodified auditor's report. Departures from the wording of the report are not permitted except where required for compliance with law and regulation. Second, using tables to present requirements related to the circumstances that may lead to the modification of report, and the text that may be used in the report where modifications occur. And third, using tables to present the form and content when adding emphasis of matter, other matters, material uncertainty related to going concern, and other information paragraphs. In addition to the requirements in Part 9, we are developing a non-authoritative supplemental guide to provide further guidance and example on modifications to the auditor's report, including a number of illustrative reports. Our final part is Part 10, which is only applicable in the context of an audit of group financial statements. It sets out the special consideration that apply to all phases of the audit. The standard also includes appendices, which include a glossary of terms, assertions, an illustrative engagement letter, an illustrative representation, as well as other relevant supporting materials for implementation. I will turn it back over to you, Jasper, to discuss the layout of each part.
Thank you, Isabel. Let's look what you will find in the standard. Each part starts with an introductory box, setting out the content and scope of that part. Then you will find the objectives. The objectives focus the auditor on understanding what needs to be accomplished and deciding whether more needs to be done. The objectives also link the requirements to the overall objective of an audit. After the objectives, you will have requirements. These are designed to obtain sufficient appropriate audit evidence for the auditor to conclude that the financial statements are free from material misstatements, whether due to fraud or error. Auditors must comply with all requirements, except where the requirement is conditional and the condition does not exist. Text presented in italics within separate blue boxes is essential explanatory material. There are two types of essential explanatory material. The first one is a general introductory paragraph that explains the context of the section that follows. The second type further explains how the author may apply the requirement located directly above it. The essential explanatory material does not create additional obligations for the auditor. Also, essential explanatory material is not intended to provide detailed examples about how to apply the requirement. Rather, it contains descriptions of matters relevant to understanding and applying the concepts or requirements. For example, it may explain more precisely what the requirement means or what the requirement is intended to cover. Where appropriate, the essential explanatory material may illustrate scalability of the proposed standard to the spectrum of entities that would likely fall within its remit. Certain requirements and essential explanatory material are only applicable when there are engagement team members other than the engagement partner. Such requirements and material are presented in a box with the header "Considerations when there are members of the engagement team other than the engagement partner." What should you do next? Visit the ISFR LCE webpage to access the final pronouncement and all the materials we've published to help with the adoption and implementation. Watch our videos focused on the authority of the standard and the benefits of using the ISFR LCE. Connect with your local professional accountancy organization to understand when and how the ISFR LCE will be adopted in your jurisdiction. Stay tuned this year when we will issue supplementary guidance on the authority and on reporting. We will publish a fact sheet on adoption and a first-time implementation guide. Also follow us on X or LinkedIn or subscribe via our website to be notified on future materials and webinars. Thank you for watching this video.